Good evening, all. Ira Epstein with your Metal Market Update, and your update is for Tuesday, the 27th of December, 2022, just after 5:51 p.m. Central Time. So as we look at the markets, we come in today, and over the weekend, you're always worried on a holiday what news is going to break that the market didn't catch up on for a Saturday, Sunday, mostly Monday trade, and you come in Tuesday and different things happen. And what happened over this period was the market took a hard look, and China took a hard look at its own situation. And China has pivoted so much faster than I thought they would, and I think that any analyst thought they would. They have gone now, and they said as of January 8th, what they are doing is they are just eliminating the quarantine rule as long as you come in. And when you arrive, you have proof that you have been tested for COVID in the past 48 hours. And if that is the case, barring all their other rules, you're allowed to come into the country. That is a radical change. The bad news, of course, is none of us know the exact numbers that are going on for how the hospitals are getting overwhelmed by COVID there and the amount of deaths. They're just not releasing numbers. When you look at how their stock market's doing, I saw that the crematorium stocks, crematorium, I read an article that said, go look at this. They've taken off because the business has taken off, and that's the unfortunate part of it. So my heart goes out to the people. It's really that simple. The good news is this is creating an event in commodities. So what it did is it put up dramatically this morning in thin conditions because, again, money gets deployed after a holiday. You took copper prices up near the 390s. You'll see it in a moment here. The silver market into the 2420s, 2430s. The gold market back up and fighting in the battle of the 1825 plus area. So these markets went up big. Oil went up on the news as well. Here you are in Brent fighting at $85 right now. We've walked into a situation where Russian President Putin is saying he's not going to sell oil to countries that have signed the agreement. None of us quite know what that means. He says one thing and you never quite know what it really is. Bonds and notes did sell off. You're getting a bounce tonight, but there was a hard sell-off there. And you even took soybeans at one time today, almost up 40 cents near the limit of the day. And then it sold off and gave back 99% of that. I think it just closed slightly higher. Wild. I've learned. I've been around this a long time. And when you try to trade these holiday markets and you come in and you think you have a handle on it, you don't. Because new money gets deployed one way, money gets taken out at the end of the year, traders wrap up their books. Normally you don't have a lot of volume. Today's volume was actually a pretty big volume day as I was looking at it. When I look at what the gold market's done, it has stayed now since, if you really think about it, since the beginning of November, it got up and over the 18-week moving average and it stayed there. It's on a trajectory higher. It's not a runaway. You see that very clearly on the daily bar chart. The pattern is bullish as you have higher lows and higher highs. Now, this is a swing line for those of you that don't know what it is. And I wrote this indicator, if you will. It has 5 rules to decide should it plot the market to the day's low or the day's high from the prior bar. That's that simple. It's a daily chart. If it were a 15-minute chart, it would do it the same way. And the rules look at it. Do you have an inside day, an outside day up, outside day down, low day, higher high day. There's 5 rules. And in my full charting course, I teach what the rules are and away you go with that. And for me, the purpose is it tells me that if I want to be long, knowing nothing else on the chart, I can't afford for the pattern not to be broken by getting under 1792.70. Yet, if I come back on this chart, and I'm going to come back over, let me do it this way. Here, I can't see that number. I mean, maybe you can, I can't. Then I look at the market with moving averages. And one of the things that you're asking is the 18-day average of closes going to cross over the 200, or is it going to come up here and do what's called a kiss? A kiss is when they come together and then it nosedives again. And if the market were to close under, it'd be a failure on the upside. I'm not expecting that, but I'm aware of it. This is the seasonal time of the year. Silver and gold typically get strong, and it carries into the month of January. Where did the market go today to run into the brick wall? Right to the brick wall. Each time you hit a Bollinger Band, if you've taken my enhanced Bollinger Band course, you know how to work with that. The pros were waiting to take money off the table. I told my subscribers that this morning. I'm telling that to you now. We then take a look at the market in terms of momentum. Why? The momentum is fine. So you had a market that corrected. It had gotten itself overbought up here. It's come down. I think you're going to see the trade wants to buy this market from 1810.60 to 1805 with stops under 1792.70 to see if they can push it up again. Back to the Bollinger Band. That number was 1834.70 today. You got higher than that, but you got thrown right back, as you can see. In the gold-silver ratio, this is why I follow this ratio, and I do it here. It gives you a way to really watch what the gold-silver ratio is. And then the importance is it tells me, do I want to be long silver over gold or gold over silver? Which one do I think is stronger? Well, silver's stronger than gold. What, by the way, why? Because as the market keeps coming down, in a perfect world, at one point you needed here in September, nearly 96 ounces of silver to get 1 ounce of gold. You now need 75.18. That tells me silver's worth more money now than the gold market. So it's the one where the strength is. Unlike the gold, it's overbought. Overbought keeps me away from a market. So that doesn't mean I don't think it's stronger. I do, but it's overbought. So one of my chart techniques is, hey, I'm looking for filters on reasons not to make a trade. When they say make the trade, I go with it. In the copper market, same thing. If we step back together and we look at this, let me come to it this way. This is what I want to do. Just like this, get rid of today. This is how you looked coming in. Obviously, China's surprise announcement, January 8th, we're lifting the quarantine rule. The first thing that's going to go in my mind, and that's what I told my subscribers at 5:30 this morning, a.m., 5:30 a.m., and I'm on there doing the videos, and I'm telling them, hey, guys, this market's going to pop on that news. It's just going to be a powerhouse. And to my surprise, it opened actually pretty steady, and then it moved out. And, you get thin market conditions on a day like today, and those things happen. And boom. So the market comes back, and by day's end, it's only up 300 points. It got up to the 394 level. That's 10 cents higher. Got up 13 cents. Why did it give so much up? Let me explain it in the best way. You get amateur traders at this time of the year. They really don't know what they're doing. They just jump in. They don't realize it is Christmas. The market's up there. And most people don't know how to play a 200-day moving average and a Bollinger Band. The percentage trade is to come out the first time they hit you. Does it mean it can't just keep going? No, I never said that. The high percentage trade is it's not going to keep going. That's all that it is percentages. Pulling back. I think the market will be bought now by the pros in the 382 area. They won't want to see it under the lows of Friday. And as long as that's the case, I think it'll stay in the bull camp. In the platinum market, no trend. You have a lower low, higher high scenario. It's how you came into the market Friday. It's how you finished. You followed through a little bit today, but didn't even get up to the Bollinger Band, nor to the palladium. It just got back to the neutral zone, the line in the sand. Remember what I call the 18-day average of closes, the red number. I call it the line in the sand for one reason. That, where the market's at in relation to that number, tells me if I have an upside or a downside bias. It's a filter for me. When the market is over it, I have an upside bias. So if other pieces of my work say buy, I'm going with it. This one's jumping in. If I get a buy signal under the market, but prices stay under the 18-day average, it's a rally in an overall bearish market that's probably going to fail against that number. And that's how I use it. So it gives me an idea of where we're at. Then I'll go to my momentum, and the momentum's pointing up. So I'm saying, I have a market that's been oversold. It's working off the condition. You do that by generally rallying, and that's what the market is doing. Last, in the dollar index, the dollar is very quiet, down 11 points today. It's almost like no trade in the market. It gets friendly if it closes over 104.24, which is the 18-day average. There's nothing here to put it back fully into the bear camp. If it falls, I'd expect good support at 103.31.5, which is the lower Bollinger Band. You've worked out of an overbought condition, so we have to see what it wants to do. Are there any big pieces of government news that's going to come out and do anything? Not that I'm fully aware of. I mean, you'll get reports, on Wednesday, Thursday, and Friday, but then everybody's going back into that holiday mode for the first of the year, and then we come back and it's normal trade. So be selective. Don't just jump in. You'll regret it. The markets get thinner on you. It's a difficult time of the year, as you'll find. If you just watch financial TV, they'll tell you. You got your secondary traders trading. A lot of the currency traders don't even bother at this time of the year. They come back after the first of the year, and then they open their books up again. And people that have made money in the year don't want to give the money up. Remember, they get paid on a bonus for how they've been doing. So those are the things I watch. What about the Santa Claus rally? Well, as I told you, there's two schools of thoughts on when it begins. One school of thought is it occurred the week before Christmas and runs through Christmas. The other school of thought is it begins the day after Christmas and runs until January 2nd, approximately. So we saw a big break in some of the stock indices, but the Dow was up. Now, which way is it going to go? The odds favor that it'll get a seasonal bounce. You had a big break today. Not hard to get a rally off of that is one of the things that I often think about. Now, I want to remind you that if you trade futures as well as ETFs, you keep hearing me talk about what I tell my subscribers in the morning. That's because at 5:30 in the morning, Central Time, I'm telling traders and I'm opening the charts and we're building trades together right on the screen. And then at 9 o'clock in the morning, I start doing it in the ETFs and the stock market. 40 charts in each of the videos. They're approximately 17 to 20 minutes long. I build them in such a way that there's a scroll bar on the bottom when you're actually looking at it. You can pull it and you can go from area to area. Let's assume you want to go to interest rates, BND or the 10-year note, whatever you want to trade. I do it and you can just scoot along there and be right in the area that you want on the website. I think you'll find that, number one, it saves you time. Not everybody wants to take a look at every single sector of the market. Other people do. That's the key. It's as much teaching as it is make a trade. Here's my recommendation. Here's why I'm making the recommendation. Here's the chart action. Oftentimes I'll back them up with daily and weekly charts to give you an idea of it. You see there. And as I said, I rotate the charts, by the way. You're not just stuck in them. I'm always rotating, especially in the Spider ETF because there's so many thousands of them to work with. So how do you find out more? It's simple. You go to our website under the word research. It's there. Or just move your cursor up here. You'll see an icon appear. Give it a click and away you go. I'm Ira Epstein. Good to see you. I'll be with you the rest of the week and you take care.